It's Monday, the 7th of March, 2022. Welcome to the Fast Five by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
And of course, if you haven't done it already, make today the day you hit follow on the podcast, and don't keep us a secret. Make sure you spread the word about the Fast Five. Story number 1 today, Sean. Russia has picked up its bombardment of Ukraine, hitting civilian targets and really putting world financial markets on edge.
That's right. 12 days on and strikes on major cities continue with no let-up for Ukrainians, but so far it appears that only the port city of Kherson has been lost to the Russians. Hopes that the conflict would be brief are diminishing, with peace talks abandoned over the weekend. In fact, Moscow and Kyiv had agreed to establish a civilian exit corridor in 2 cities under bombardment. That pretty much collapsed immediately after Russia violated the ceasefire. The big issue over the weekend was whether or not NATO would introduce a no-fly zone over the Ukraine. NATO allies have resisted that. The problem with that is if they do introduce it, they're almost obliged to shoot down aircraft or missiles in that no-fly zone. As Vladimir Putin said over the weekend, that's tantamount to declaring war. So they're staying away from that at the moment. All this is really hurting markets at the moment. Extreme volatility. Oil prices above $115 a barrel, gold heading towards $2,000 an ounce. Iron ore prices are high, wheat's at a 13-year record. Natural gas, coal, aluminum, copper, palladium, all trading near record highs.
Sean, that leads us really neatly into story number 2 today, that all things considered, last week the Australian market did okay.
In fact, it's done pretty well all round, and that's thanks to higher commodity prices. Last week, it was up 1.6%, whereas most other major bourses ended lower. US was off more than 1%, China was down nearly 2%, the Eurozone bourses were off 10%. The Aussie dollar ended the week higher too, trading around 73.8 US cents. Let me try and put some perspective around this. From their peaks of last year, US shares are down about 10%, Japan's off 15%, Europe's off about 20%. The local market's only off 7%, again, thanks to commodity prices. The key factor driving markets right now is what's happening in Ukraine. If it's limited to Ukraine and oil and gas continues to flow between Europe and Russia, then the financial impact should be relatively limited. However, if the energy sector is hit, all bets are off.
Okay, story number 3, Sean, is about an Australian company and Ukraine links. Aristocrat Leisure has evacuated 1,000 staff from the country. That's bringing the war close to home, and it is something I had no idea that Aristocrat had so many people in Ukraine.
Yes, the gambling and gaming machine operator has about 7,000 people worldwide and reportedly has the largest footprint of any Australian company in Ukraine. It's already helped 200 people leave and 150 people move from Kharkiv, which has been under constant fire. Now, Aristocrat also employs around 500 people in Russia. There's no sign it will do anything on that front just yet. Michael, Ukraine itself is known as a tech hub with a relatively low-cost, highly educated workforce. They provide many services to many companies in many countries around the world.
Okay, story number 4 today. Sean, there's some big news out of China over the weekend, and there's a fair bit in it, but there is a little bit of good news in there for Australia.
That's right. The political elite in China met in the Great Hall of the People in Beijing to support a 7% increase in defence spending, massive increase that, including enhanced combat readiness. The military budget of China this year is $311 billion. The country also adopted an economic growth target of around 5.5% for the year. Now, look, most Western economies would love to achieve growth at that pace. Remember, Australia hit 4.2% last year, and we're all pretty happy, but it's actually pretty low in terms of Chinese target rates. In fact, it's the lowest in 3 decades. While there's no massive increase in spending, as some economists had expected, the good news for Australia is that Beijing is stepping up its infrastructure spending. That needs steel, which needs iron ore. Great for the big miners.
All right, last story today, Sean, story number 5. And it's an interesting story because I know this is one of your favourite companies, and I find that a little bit funny because you're very much a city dweller, and I just can't imagine you buying puffer jackets and camping gear and hiking boots and all of that. But anyway, Kathmandu is changing its name.
I like going into the stores and looking at the stuff, but God, no, don't buy it. Anyway, the retailer that's become pretty much synonymous with outdoor activity in Australia is going for a new look. It also operates the Ripcord brand and the US-based Oboz hiking brands. The new name is KMD Brands. It's got a new design, a new colour palette. Apparently, the brand is supposed to make it clearer what the company is about, which, of course, is owning and operating outdoor brands. I don't know why an acronym makes that clearer. Anyway, Kathmandu, it's a market leader in Australia. Ripcool is certainly a global surf brand, and the company's pushing to break into the top 3 brands in North America and beyond. Good luck to them.
All right, that's it. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Monday, the 7th of March, 2022. As I said at the top of the show, remember to hit follow on the podcast. Don't forget to spread the word. And if 5 minutes isn't enough, then you can find our longer daily show called Fear and Greed on your podcast platform. I'm Michael Thompson, and that was the Fast 5 by Fear and Greed. Have a great day.